All right, this is Tim Sanders here with the Tim Sanders Experience. And before we even start, I got to take a few pieces of business. We're sponsored by Strictly Healing Transportation. Cut the check. All right, I got my boy here, Ed here. Ed, man, how's everything been going, bro?
Everything's been going well. It's been a interesting year to say the least. So
Okay.
life is good.
How was I know we just ended quarter three. How was quarter three for you?
Quarter three was good. Like that's like finally starting to pick up some steam and just starting the brokerage out. Like pretty much the first part of the year, I would say it was just all getting everything set up, signing up with different accounts, different investors, just like learning the things that you don't know from having to do the whole process and not just focus on the origination side. And then probably quarter three, like I close loans every month and like everything is rolling going into a strong quarter four. I had a closing yesterday, got hopefully if everything goes according to plan, close another 6 more deals before the end of this month. Got like another 5 or 6 already for next month. So everything's cool. Like it's actually a little bit busier than it's ever been, surprisingly enough. So
So you guys might not know this. Ed and I, we used to work together back in the day at United Wholesale Mortgage or Shore Mortgage back then.
yeah,
But Ed just recently opened up his own brokerage. Ed, tell us what's the name of your brokerage. And
black equity lending.
okay,
So
okay.
it's good.
And how many years have you been in the business?
Man, this is year number 14.
Okay, wow.
Yeah, I've been
Okay.
at it for a minute.
So we pretty much started around the same time then because I'm like 13 years in this industry right now. So okay.
Yeah, I started at Shore in March 1st, 2010. I remember that. It was it was a game changer. It was a like I remember going through training and like they didn't everything was in mortgage terms, so it was like a foreign language, but like in due time, it all comes together. So
I know that when we first started, it was a big refinance boom. And how do you feel with 2024? Like, what's going to happen in 2024? Because me personally, I think it's going to be very similar, but not as big as 2008, 2000. You know what I'm saying? But I think it's going to be very similar. It's going to be a boom again. We're going to start. Everybody's going to be making money. How do you feel about it?
well, regardless of what's going on, I know I'm going to make some money. So that's the most important thing. But I kind of transitioned over to a purchase based model like about 6 or 7 years ago. So the only refis I really do are just like for my past closed purchase clients. I'll get like a person here or there. But even like during the time when rates were in the twos and threes, I was like basically just focused on purchase business the whole time. Which is why, like going into the times that we have now, like everything has pretty much just been like the same, if not busier, because refis come and go. Those are based off of rates, but purchase business, people buy houses every day, regardless of what. So always, and my bills come regardless of what too. So like, I just felt like it was a better model for me just to move, like for the long term.
I totally agree with that. Like me personally, in the last 2 years, maybe I've done four refinances. I'm strictly all purchase business. And people always ask me like, but Tim, the rates are going up. Like the rates are continuously declining or whatnot. And the truth is, people buy homes for a million reasons, right? And the on the bottom of the list is rates, but at the top of the list is like you're getting married, you buy a home. You're having a kid, you buy a home. You get divorced, you buy a home. You know what I'm saying? Like your kids go off to college, you want to downsize, you buy a home. So there's a million and one reason why people buy a home, and rates is not one of those reasons. So I definitely agree with that, man. So I know that
So real quick before you get to the next thing, I gotta tell a funny story because I tell this to my clients all the time, and for anybody that's listening. So I still do refis, of course, like you said before. That's where the foundation of my business came from. I probably did a few hundred refis before I did one purchase transaction before. So even though it's self-sourced, I still use a lot of the same scripting that we learned like within the call center environment to give someone a professional experience, and so I can remember everything that I said to them. And one thing that's funny to me is people are so crazy about rate. I would say 9 times out of 10, when you go through the process of trying to refinance someone and ask them what their interest rate is, they never know. So, and I always try and remind them of that, like
that's a
even
good
during
point.
this time period. Everybody knows their payment, but if you ask them what their interest rate is, they always have to go get like their mortgage statement to try and figure out what their rate is. They don't know because a lot of cases, it's not even on your statement. They just have the payment that's on there. So, like just something for people to keep in mind, like just focus on the payment. Of course, the interest rate drives the payment, but like after you get into the home and start making a few payments, you're not going to even remember what your interest rates are. Just the same way you don't know what the interest rate is on your auto loan or your credit cards. Just focus on like your monthly expenses.
I totally agree with that. Like or when you get those people that they want to like fight you on the rate, but and then you talk to them about, like you said, their credit card interest rate or their auto loan interest rate, and they're both in the 18-19%. Like what are we doing here? Like this rate here is 8%. Like, let's move forward, let's close the deal. I know that you and we both been having some experiences with the Detroit grant programs. How do you feel about it? Like, I seen that you've been closing a ton of deals. If anybody knows anything, ask this man for some money. He got plenty of it now. Like, this man making money left and right.
I wouldn't go that far, but no, things are going well. But I mean, I just found out that we could do it on the broker side, so I think it's a great opportunity. Like, so here's the crazy part. Like, of course, as we both know, like right during like the heart of the pandemic, for like probably like the last year and a half, almost 2 years, like I went through a period where rates were low, like where I didn't have any deals where there weren't any appraisal guarantees on there. We're basically saying like, even if the home appraised for more than what it's worth, I'll bring cash in order to close on a deal. Like, had clients bringing in $30,000, $40,000, like on top of their regular closing costs and down payment amounts. So even though rates are higher now, it's just a wonderful opportunity to get in, because like a couple years ago, these same houses that the government is giving you money for down payment and closing costs to spur activity, like you pretty much wouldn't be in the game if you had like the 3 or 2 to 3%, because those same houses would be in bidding wars, and you wouldn't necessarily have the money in order to get into the homes. Because even now, like some of the homes in like the nicer areas that have been completely renovated are getting grants, where before it was just, like the house that sat on the market for a long time, it seemed like that nobody would want. And it's just like, you got to take this and get in the game, and then you could fix it up later. But now that's not the case anymore. Pretty much, it just seems like almost everything, as long as you qualify, is fair game. Some of these houses are really nice, and the investors just really want to sell. Like, they're not necessarily concerned about where the money is coming from, especially like as things start to slow down. They just want to make sure that they get a return on their investment. So
I agree. I think a lot of people they're missing out on the opportunity and this boat that we have here right now, because the interest rates, they may be a little bit high, but if you can afford to get into the property, get into the property, because once the interest rates come down, then all the buyers are going to flood the market again, and then they're going to make the values of those homes increase back up. So it's going to be the same. You're going to be in the same boat, but just different waters. Exactly. So you just got to figure out what do you want. If you really want an object, or you really want that's this particular property, right now is the perfect opportunity to buy.
Yeah, like I have people that like almost all my files right now have seller concessions on them, and like that was unheard of. Like, down payment assistance grant, seller concessions, grants, concessions, and like during a certain time period for that window, like almost 2 years, if you said the word concession,
the offer was was ripped up.
It was, like you can try, but like you might have to put in like 20 offers before you got one accepted. Now it's definitely, I know real estate is local, but I feel like in the Metro Detroit market, it's definitely a buyer's market now compared to what we've seen. Of course, like some houses every now and again are always going to go, but compared to what we've experienced over these last couple of years, this is the time. Like, I understand the rates are higher, but like everything isn't going to always be ideal. Like, these programs they didn't need to exist when rates are at 2 or 3%, because the demand was there. So when the demand isn't there, like that's one great thing I learned about being in real estate, well, being in the mortgage side of real estate, is that like they always try and come up with different programs and ways to drive demand. Like the same way we did all the HARP refinances back in the day when all those people were underwater. Like, it's all like, you never know what it's going to be, but they're always going to come up with some type of way to try and encourage activity. Like, I remember my first loan I ever did was for my mom, and they were doing like the first time home buyer grant for that, where you got up to $10,000 back, if you bought a home. So same thing there. So it's like we just have a history of like guidelines and programs changing all the time, like in some way to find ways to, make people like get active within the marketplace, whether it's through purchase, refi, or both. So
okay, all right. What type of like programs do you particularly have that you specialize in, that your company specializes in?
So, like you said before, I've been doing the Detroit grant. So, like, I should have a couple of those closing. So, I'm excited about like just kind of going through that process. But like they say, like 95% of the market is pretty much the standard conventional FHA, VA. So that's kind of like what I specialize in. Like, I kind of keep the main
Likewise,
thing, the
yeah.
main thing. Every now and again, as things start to come up, I'm starting to get more non-QM stuff, like the bank statement loan programs and the DSCR stuff we were talking about before we just got on camera. So as those come along, I'll take them. And like pretty much the foundation of a loan in my mind is the same. So like once you go through it and kind of know what to expect, you can articulate it properly to the client and like set proper expectations. And like you could just add it as a tool to the shed. But for the most part, like the foundation is still, in our case, majority FHA and conventional loans. So
I just did a assets as income type deal and type of loan. It went to a different lender outside of the standard lenders that we use, and I did two of them. Right, one of them was for someone that works at a car wash, and another one was for a exotic dancer.
Okay.
And basically, because they make all their income in cash,
right.
and we can see those deposits going into their account. You know what I'm saying? We can use those bank statements as their pay stubs almost. So
Right.
it's just another way of like finding different programs out there for these clients, because I think the broker channel that we're in, I think it's the best channel to be in, because out there in the banks, if this came to a bank, the bank would have easily denied this deal. But you and I find different ways to be able to get people to the finish line and get them to the closing table.
Absolutely. Yeah. Like most banks it's pretty, every now and again, like don't get me wrong, they will come out with a program like or two, like once they decide to play in certain fields, like it could be kind of tough, but overall, like I worked at like multiple banks throughout my lending career, and it's just something about just kind of having vested interest in multiple places versus like just kind of being single focused. Like, like if you're in a meeting, they're like, well, you close these loans, but did you help somebody open up a checking account? Why didn't you refer them to the financial advisor to do this? And it's just kind of, or they want to talk about how many credit cards they got for that particular month. And it's just like, well, I only eat if we close loans. So and that's kind of one of the reasons why I transitioned away. It was just like, I need someone that's just as determined to close loans as I am. Like in your case, you could kill it in auto loans, or credit cards,
right.
and feel like everything, mortgages are down, but the company made X amount of dollars, but I don't profit from that. So I just really want to just kind of focus on what I'm here for. And, the other things are cool, but I don't even really feel comfortable referring people when it's something I'm not even really aware of as far as like how everything even works. So
Likewise, if I can't explain it to them, then why would I refer them out to somebody? Like if I can't tell them what the process is, to refer them out is kind of like I'm referring to somebody blindly doing it. You know what I'm saying? So I totally get that.
trust is hard to gain, easy to lose. So if they trust me enough to let me do their transaction, like I'm real like picky about like whom I would refer them over to, because you can't, all it takes is one time to get burnt, and then it just makes you just extremely apprehensive about like where you would send a particular person as far as a referral. So
Okay. All right. Yeah, man. No, I really appreciate you coming out here, man. This has been I don't know. I don't know how much time we got. I don't want to.
10 minutes, that's it.
Okay. All right. Well, no, I want to definitely thank you for coming out here, man, and I appreciate you for coming out here. Before we get off, though, tell us a quick story about one of the craziest deals you had. Every time I talk to this guy, he always has like a crazy deal that like this something that goes left, or like sometimes as borrowers you don't see everything that goes on behind the scenes. And I know that you guys want like mean the best and like and all that. Like I had a client who basically she showed me her bank statements, right? And she had $20,000 in the bank, but then her paycheck started getting garnished. So what she did was she took all of her cash out of the bank.
yeah, I got a deal like that right now where this probably isn't the craziest one. Like it's been so many over the years, I don't even know like what to put like at the top, or especially a positive one. I don't want to put any negativity on the podcast. But yeah, I have a deal right now where like a client, she sold her previous primary residence and profited like a little bit less than $100,000 from the sale of her home. But then for whatever reason decided she doesn't trust the bank. So all of a sudden you just see all these bank statements where it's like pulling out 90, then I put in 45, then I pull out 50. And it's just like, it got to a point where so the numbers don't even add up to like where the closing disclosure matches the deposit. So it's just like, even though this should be an easy loan that we could close right away, like, it's like, yeah, we have to season these bank account statements because we'll get tore up. And then they want to put a lump sum down for the down payment. And it's just like, we can't even do a gift or anything like that because it's just too much to ask someone for. So it's just like, those type of things are fairly common. It's just like, what happened? Like, because on one bank statement, it literally looks like there was $150,000 worth of deposits, but all it was them taking the proceeds from the sale of their home that they got in the cashier's checks and constantly putting it in and taking it out. Like, I trust the bank. No, I don't trust the bank. I trust the bank. No, I don't trust the bank. So, and it just kind of, the loan was like, we'll still find a way to get everything done, but it just kind of takes a process that could be somewhat, it just makes a easy process a little bit longer, or it could just add a little bit of an unnecessary step involved. And if you're dealing with someone that hasn't dealt with stuff like that before, and we just turned everything in without proper seasoning, it could cause like a major issue.
Yeah, I totally agree. I think that's when it comes down to having an experienced mortgage broker or a loan officer compared to someone that's not experienced, because someone else would just grab those statements and put them into the system, and then me as a former underwriter, I'll look at all those documents and I'm going through everything, right? And I'm like, okay, what's this? And then you have a list of conditions that you can't even meet. And then now we have a dead deal and we're trying to bring it to a new lender. But that's why it's always important to have an experienced loan officer, experienced mortgage broker, but also an experienced processing company, because sometimes you deal with processors too. And what they're doing is they just grabbing documents and putting them in. And it's like, wait a second, now our clients are paying you $700, $800, $1,000 sometimes to do what's in their best interest. And they're not paying you to just push papers. It's actually to review these documents and to make sure that we get to the closing table as quickly as possible.
Yeah, exactly. The one thing I will say that I was just thinking about this the other day is, like, of course, like, the experience is there now, but it wasn't always like this, of course. So, like, the one thing I think that for any other like lending professionals or agents out there that are watching this as well is just sometimes what you don't know. So as you gain experience, like, you just kind of mentally just learn more and more. But when you're newer, like, even if you have to give up a good portion of your commission, you just need to work, if not on a team, but at least with like an experienced agent or lender, because it'll save you more in the long run. Like you said before, like, I've been in this industry for 14 years and I've literally done thousands of loans before. Probably waited a little bit too long to start my own thing. But just saying, like, I can look back on, like, even when we started together at Shore, like, I was probably a few loans in, even though that wasn't the structure. I knew I didn't know what I was doing. So I was always having someone look over my documents, explaining things to me, and like reviewing my closing, like my HUDs, in order to like kind of learn every time that I had a situation closed. Like, you don't want to be like this is literally your first transaction as a lender and just doing everything on your own, because it's almost 100% guarantee you're going to mess up. And this is like a big transaction. So the clients aren't always as forgiving as you might think they are. Like, it's just like, they don't care. They just want their house and they just want everything to go well. And then the same thing from a real estate agent standpoint. Like, sometimes you want to kind of lean on the lender, or at least in my experience, want to lean on us to kind of guide you through things. And it's like, my heart may be there with you, but I'm not a licensed real estate agent. So like, that's one thing. So I don't want to like, cross the line. And then two, like, you're busy as well. So it's just like, like some of these things, you just don't always have the time to hold someone's hand all the way through the process, when you know that there's systems set up that could hold your hand all the way through the process. So it's just like, I would rather take a small amount of a larger pie than to try and keep everything for myself. It's all a process. No one knows everything in the beginning. So like, as you start to become more familiar and start to close a few deals, then maybe you could start venturing out on your own. But there's no way you should be doing your first, handful of deals by yourself without someone reviewing and helping you, guide you through this process. It's already stressful enough. So
I was just dealing with a this year, bro. I deal with a lot of newer real estate agents, because I also like I teach classes and things like that, and I teach real estate agents how to get leads, and I I'm guiding them basically, right? So I'm dealing with a few right now, or earlier this year, where they were not a part of it. Where they were part of a team, but that team didn't help them, right? So I had two real estate agents. They was like, "Hey Tim, we're putting in offers. Can you we put in offers. Can you show me how to create a purchase agreement?" I'm like, wait a second. Like, hold on. like we got to have somebody on your team that's going to be able to guide you through this. Like my job as the lender, I don't mind helping when I can step in and help, but my job as the lender is to find funding and financing for our clients to get them to the closing table. We got to have, like you said, a structure. Me personally, I have mentors. You know what I'm saying? Like I actually go to my mentor all the time. Like, hey, I got a question. BMAC. Shout out to BMAC. But
Yeah, he helped me too. So it's all good. That's my
yeah,
guy.
so he's my mentor. When I have questions about certain things, certain loans, or certain things that I don't understand, I'm like, hey, like what's going on with this? Like, how do I get this structure right? And then like it does not hurt to ask questions. It does not hurt to ask questions.
Yeah, like I said, you know what you don't know. So it's just like you're going into this and you already know ahead of time that you don't know what you're doing. So you just gotta, yeah, there's no shame in getting help.
I really once again I want to thank you again for coming out here.
Yeah, it's all good.
Tell everybody again what's your name, your company name, and where they can reach you.
Ed Williams, Black Equity Lending. You could reach me direct. It's a business sale, so that's cool. It's area code 248-521-9237. That's 248-521-9237. So you could text or call there. Email is ed@blackequitylending.com. Either one of those is fine. Like I get texts all the time, emails all the time. Anything I can do to be of assistance, I'll be more than happy to do so.
Again, ladies and gentlemen, this is Tim Sandridge. I am the mortgage doctor. I can be reached at 248-595-1110. Again, 248-595-1110. You can follow me on Instagram at Tim Sandridge or the mortgage doctor. You look up both, you probably find me. Again, this podcast has been sponsored by Strictly Healing Transportation. Cut the check. Thank you again, Ed, for being on the podcast, man. If you guys have any questions, don't hesitate to reach out to us. Thank you, guys.